Regulation is about the operator of the regulation. We know the committee, but the level 2 will be absolutely important. Then the first question will be to Fabrice to tell us what are the major lessons that he took from this survey and his recommendation to the Commission. And the second will be what under the Italian presidency will be done about those recommendations. Then Fabrice.
Well, thank you very much, Edouard, and let me thank you for inviting us to this panel, and also say that we are sponsors of this panel. And the reason is that, if you allow me 30 seconds to explain, Mazars is an EU-origin global audit and advisory firm, which is increasingly connected and related to the creation and the growth of the single market. And we offer services to our EU clients around the world. And actually, if I may, just about regulation, say that in this 41 directives and regulation, there was one on audit that was approved a few months ago, which will create also a more genuine single market for the audit market. And to put it in short, it's a regulation that shakes a little bit the oligopoly of the Big Four and creates opportunities for new market players like us, Mazars, and I will be happy to explain that if you are interested. Now moving to the topic of this panel and the starting point of your discussion. Yes, indeed, we were asked by the EU Parliament to conduct a study to evaluate the functioning of the three authorities 3 years after their establishment. These three authorities are the European Banking Authority, the European Insurance and Occupational Pension Authority, and the European Securities Market Authority, ESMA. I could invite you to read it. It's a long report. It's published on the website of the Parliament. But let's go to the most important points and what should be the lessons from the 3 first years and the priorities for the future. It's interesting in itself to notice that these 3 authorities have almost copy-paste the same original legislation, because the 3 regulations are almost the same, and they have evolved in very different manners over a very short period of time, which is 2 or 3 years. EBA has, in the meantime, seen the creation of the single supervisory mechanism, and therefore all the supervisory aspects, or at least for the Eurozone or voluntary countries adhering to it, has gone to the ECB. So its role is now more focused on regulatory issues, but, and this is not insignificant, ensuring consistency for the whole union of a number of rules and the way supervision is done, and this is why it keeps a very crucial role as long as the UK stays in the union. Regarding EIOPA, it's difficult to evaluate in full extent because the Solvency II legislation was adopted eventually after a long discussion just a few months ago and has not been fully operational in terms of supervision or doing consistency supervision based on Solvency I, which was quite a challenge, I have to say. But Solvency II is such a change that a strong EIOPA is required to have that as a successful achievement for the Union. And ESMA went through a different route, so its scope of competences expanded to new territories that were sometimes not even regulated in the past, and is the only one that got a direct supervisory function on rating agencies. So very different lives, or short lives, but nevertheless, we came to the conclusion that there are structural issues on which, for different reasons, they need to be reinforced, and there is a need to some improvements for the three ESAs. To make a long story short, I think the ESAs have been very efficient machines to create secondary legislation, meaning implementing measures of level 1 directives and regulations. Of course, you can, when discussing each and every detail level 2 measure, disagree or with what is proposed, but that's a different issue. The system itself works well, and it's properly balanced between the various powers, and for sure, the introduction of qualified majority voting in the board of supervisors of these authorities, where the national authorities sit, has been a huge change, because regulators, national regulators, can compete, disagree, negotiate, and at the end vote, and the final vote is accepted, and it is bad or good, but it's that. And it's functioning well and accepted, and therefore the machine works quite well. There is a number of things that can be improved: consultation, less detailed level 1, things like that. But broadly speaking, the machine works well. Well, the weakness of the system immediately appears is all the tools that have been given to these authorities to ensure consistent supervision. I insist on the difference. Previously, we were used to speak about convergent supervision, but the regulations has changed the word. They speak of consistent supervision, which is not the same than convergent, and gave these authorities a number of powers, which is peer reviews on how things are implemented, mediation procedures, breaches of law, binding opinions, and a number of participation in colleges of supervisors that were supposed to be the place where consistent supervision on an EU-wide basis should happen. And what we see, and you will see in the report, the intensity of use of the powers given to the authorities is very diverse. They have been using extensively and intensively regulatory powers, and quite efficiently. Supervision of rating agencies was perfectly used by ESMA, direct supervision, but all those powers that I was mentioning to ensure that the national supervisors implement and apply the same way the rules they agree, it's clearly not used or very poorly used. Now the question is to understand why. There are good practical reasons for that. There are young organizations. They were busy settling, recruiting, finding places where to work, and it was maybe early days for the first or second year to activate all these powers. There are matters of resources, for sure, financial resources. These authorities have limited budget, and then there is a structural issue there. Their budget is based on contribution from the INFACT DG Mark, so the European Commission, and the national supervisors, which means that every time an authority increases its budget, de facto it diminishes the budget of DG Mark and the budget of the national regulators, which are under strict constraint. So there is a real need to revisit the way the authorities are financed, and there are two options that can be combined. One, they have an independent line in the EU budget. Today they are a sub line of the Commission, which creates a matter of independence. They should have, I believe, their independent line in the EU budget, which creates, in terms of independence, makes a difference. And they could be financed through the industry itself, which happens for rating agencies, which they supervise directly. And if it happens, it should be done in a way that it's not the industry paying twice, the national supervisor and the EU supervisors. It should be one or the other. Now, the other reason why it doesn't work is because there is a number of legislative obstacles for the triggering of these powers. And to give you to illustrate two examples, the possibility for ESMA, for example, to sit in colleges of supervisors of exchanges of CCPs. If you read the regulation about ESMA, there is a long article about what ESMA could do being present in a college of national supervisors. But then there is a last sentence that says, but they can only do it if there is another legislation that says that we created colleges for exchanges, for CCPs, for CSDs. So meaning it's quite unique in terms of law that you need a double legislative legitimacy to activate a power. And this is true for a number of these powers. They need a double hook in the legislation. So it was easy to give it in the creating regulation of ESMA, but then, of course, every time there is a discussion about should ESMA do it, then very often it's not done. And the other example is the short selling ban, where the only possibility through a number of conditions for ESMA to intervene was challenged in court to say how strong is the tension about giving powers to these authorities. But more importantly, and maybe to conclude, there is still an institutional and a governance weakness, which is mainly the way the decisions are taken. As I said, in regulatory matters, meaning when the authorities adopt rules or give advice to the Commission on something that will become binding law, the system works well. And there, the members of the board, who are the national authorities, vote by qualified majority, and it is efficient. But when it comes to decisions on supervisory matters, meaning doing this role of supervisor of supervisors, then it's a vote per authority, meaning each national authority has one vote, and the chair of ESMA has no vote, which is then, there is a strong imbalance between the voice of the national interests and the voice of the European interest as a whole. And I do believe that this should be rebalanced. So one of our proposals is to review the governance and to create a sort of more executive board. Today there is a board of supervisors and a managing board, which is members of the board of supervisors conduct some internal issues, and they have this secondary board, which the role is not clear. I think we should move to something more ambitious and stronger by creating a real executive board composed of the chair of the authority and 2 or 3 full-time members, like commissioners at the SEC or at the Council, which, with more seniority, can help take decisions. They would have a seat in the board of supervisors with no voting right when the board decides on regulatory issues, because how can you put one person compared to a qualified majority of BaFin or the FCA, but with a full vote when it comes to supervisory issues. And that would give stronger weight to the EU voice, EU interest voice compared to national interest voice. It will also help the chairperson to be stronger, because the chairperson then will have a vote. And it has been seen during the crisis that the chair of these authorities were quite isolated persons, lacking support. That will help them to have a stronger weight in their boards. It will be also a possibility for the industry to have a voice, because I think these 2 or 3 external full-time members of the executive board should be recruited beyond the active regulatory community and could be former industry players, and so it will create something different. It will enhance the profile of the ESAs compared to other institutions like the ECB, and it will definitely help the capacity to have more stronger supervisory consistency. So we have a number of proposals, but I think the structural one would be a nice objective during this review of the functioning of the ESAs.
Fabrice, thank you very much. I think it's very important to differentiate the role of regulator and supervisors, and obviously sometimes there is confusion between those two roles, and probably there is two types of governance that would be adapted to those two missions. What I understand is that we can be happy, in fact, because those startups starting under the pressure of 41 directives coming from the Barnier plan, it's already a miracle that they've been able to deliver what they already delivered. And it's clear that we have to take lessons and progress.